It's the line everyone is watching, the line everyone is recalculating, and in many ways, the line that's forcing our industry to rethink how we evaluate risk, value, and long-term sustainability. From construction cost volatility and labor shortages to reinsurance pressures and increasing loss severity, even outside of traditional cat zones. Property hasn't necessarily become riskier overnight, but it has become harder to price, harder to predict, and far less forgiving when values miss the mark. So today, we're bringing in someone who lives at the center of this conversation. We're joined by Stacey Friel, Second Vice President, Senior Underwriter, and Senior Habitational Product Leader at USLI. Stacy oversees apartments, 1 to 4 family rental dwellings, and residential condominiums, and brings 28 years of experience navigating market cycles, valuation challenges, and underwriting discipline. We're excited to dive in. Stacy, thank you for being here.
Thanks so much for having me today, Will.
Of course. We're here today to talk about the state of the property market and insurance. Can you elaborate what you're seeing today?
Yeah, the property insurance market today is actually ever changing, right? We know that it has changed significantly in these past couple years, but it's starting to become a little bit more stable in 2026, which is really exciting.
What we've heard in the prior years is instability and volatility and premium rate increases and carriers changing what's eligible. So what's different?
Yeah, so last year, for if you remember, the hurricane season did not really hit us as hard as expected. So there was a lot of modeling that was looking that it was going to be a very expensive year. Fortunately for carriers and reinsurers, the market went from, I guess it was 107 billion last year, and their expected was a $200 billion loss last year. So that's a lot of money that, yes, was not paid. So now you're looking at, having such a successful year last year. They actually now are the property markets are going, maybe we can start working and writing some more business again in certain areas. Maybe we don't have to increase rates as much as we need to. So it's actually a really exciting time for property markets.
That is exciting. And for policyholders and agents alike, absolutely.
That it is.
The previous years, and we had an episode on cat claims, that had contributed, and unpredictable weather patterns had contributed to those difficult years. Is that right?
Yes, those cat claims, also not just cat claims, meaning like your hurricanes, right? But also those secondary perils was what we heard about. You didn't have secondary perils years ago. These new trends in the climate change, which is really contributing to these type of perils. When we talk about secondary perils, we talk about those tornadoes, those ice storms, wildfires in areas that we've never seen before. So those type of losses aren't currently modeled, or they weren't modeled up until recently. So a lot of modeling is trying to depict and trying to understand where the next one's going to pop up, right? So those carriers are trying to keep up with that, right? And that's where we saw a lot of that rate increase happening from.
Yeah, that's what I'd like to get into next. It's a delicate balance with an unpredictable nature. If anything we know about nature is that it's unpredictable. Carriers have to remain profitable to offer property coverage in the very first place, right? So talk to me a little bit about that balancing effort in that game.
Yeah, so carriers, they're constantly looking at how much business they're writing in a designated area, right? So looking in certain territories, seeing where the types of losses that they're having, is it something that's out of their control or is it something that's in their control, right? So occupancy plays a part. Are they going to stop writing in a certain segment of business, or is it because they're in a certain state that maybe has certain types of losses, right? So I think a lot of carriers out there have been looking at that book of business and trying to make changes to stay in the business, right? So they'll maybe do some deductible changes. They'll increase deductibles. We've seen they may cap or not write certain types of construction types, frame. I know some carriers stay away from frame construction type because if a fire happens, it's just going to take the whole building out, right? There's not so it's a total loss in most cases. So a lot of markets at that time, that's what they were looking at, and now we see that some are now starting to enter the market again and writing some of that higher target or the higher loss susceptibility of those types of buildings.
There's a lot to unpack there, and there's a lot of valuable information there. And you refer to looking at a book of business, reviewing a book of business. What tools are at your disposal to make sure the property is what you think it is?
So underwriters today use a whole bunch of tools. The internet is our friend. Um, if we don't have an inspection in hand, which not every carrier is going to, or not every agent's going to supply you with an inspection from a prior carrier, right? We still have to analyze the data. We still have to kind of make sure it's what they say it is. So, the building type, the construction type, the age is important. Um, Even just making sure we understand where the location is. Zip code plays a huge underwriting role because, certain areas could have higher crime scores, they could have brush fire areas, right? So making sure that those zip codes are accurate is important as well. So I would say, those things are kind of what underwriters have been looking at recently, as well as using the tools on the internet for verification purposes, right? We always want to check to make sure it's a shingle roof and it looks nice and it's not half blown off. We want to make sure that the insured has been taking care of the property.
Right. And it's so interesting to think about what's available now as compared to what used to be. I have a relative of mine who was in the insurance industry a little while back, and he likes to talk to me about it. He was an underwriter. They had these long drawers that they'd pull out with maps on them that had coffee stains, and they smelled like cigarettes, he told me, and they had pins in them. And that was their best effort to figure out, all right, where are we writing property currently? Where else can we write it? Are we experiencing losses in certain areas? So it looks a lot different today, doesn't it?
Does, yes. The modeling and aggregation tools that carriers use today to pinpoint how much they're writing and where is what's used, is used heavily in how they make decisions going forward for that year. Also with reinsurers as well, right? They have to reinsurers want to know how much you're writing in a designated area. You have that tool at your hand instead of just little push pins now and go, oh, I think this one the blue equates to 3 million. This one equates to 1 million, right? And adding it up. We have these tools that just are able to tell us where we write, how much we write, and how much is susceptible to any type of claim that may come up.
Yeah, that data is valuable. Allows you to be more efficient, I'm sure.
And you're able to then, maybe even target some other areas or grow in that area, right? If it's something that you're not seeing a lot of success in, maybe you want to target that area and say, oh, what do I need to write more business there? And take a look at that and try. And like I said, just try to get in where you can.
Interesting. You mentioned reinsurance. Can you talk a little bit about the role that plays for a property insurer?
Sure. So reinsurance, each carrier is going to hold on to a certain level or capacity. And when a large catastrophe occurs, right, reinsurance is going to pay and make up the loss, right, or the difference in the loss. So when the reinsurers, look at the capacity and how much they want to give a carrier, they'll if a carrier comes and says, I would like to write 400 million more in this state, they're going to look at the book, they're going to take a look at the losses they've had, and if they're going to be able to extend or give them some more capacity in that area. So that's kind of reinsurers play a key role, not only just in pricing, but availability to the insured.
Interesting point. I think that's one of the things that might be misunderstood or unknown from a policyholder's perspective. So it's incumbent upon the agent and the carrier to communicate some of that, right? Why certain coverages are available in certain places, why premium may be going up. Can you elaborate a little bit on that communication effort?
Yeah, I think, and I'm going to ask you this question, your auto insurance has probably gone up, even though you've never, ever had a claim, correct?
I don't know about the claim part, but
Mine
yeah.
has. I can tell you, I've been insured for 20 years, and I keep paying more and more premium. It has nothing to do with me or the losses that I haven't had, but it's also going to, really be about the pool of insureds that they've had and the losses that they've had, right?
Right.
So it's to supplement. So those type of things, in the marketplace, do happen and do occur. So those rate increases sometimes do get put onto that insured. But as I stated earlier, in 2026, it does look like it's going to start maybe even leveling the playing field. Rate increases aren't going to be as substantial as they were in the past couple of years. And as you said, with the reintroduction of some new markets, even that coming into play, the reduction of rate could also play a key role in helping out insureds who have maybe maintained their property and never had a loss. Why should they get looked at the same as someone who had a loss a couple years ago?
That makes a lot of sense. You started this episode by saying there are ebbs and flows, and it's unpredictable when it comes to property. So have you seen similar trends before, where maybe a period of volatility is followed up by a year of profitability? Is this common occurrence, or
It is.
we in a unique time?
Yeah, I mean the hard and soft markets, as people do talk about, it does play in a role, um, and it does change. Does change based on a lot of variables. The cost of construction really does also play a huge role as well, when it comes to how much an insured or how much a carrier will write, right? So I think right now, as you said, besides some of these types of losses coming in, this is the highest price point of real estate, right, today. So some of these markets that were only 300,000, some of these buildings are 300,000 are now $1 million, right? So the cost of construction has gone up considerably. So a lot of these markets or a lot of insureds have to kind of now look at their policy and go, "Ooh, I think I need to increase my building value, but I don't want to pay an additional $5,000 for that," right? So I think that's kind of something that agents and insureds are constantly looking at.
Yeah, that's certainly a storyline as of late. That's a trend. And is it just cost of materials? Is it inflation affecting more than just that? Labor too?
Labor, yeah, labor, the supply chain issues, right? These projects have taken a lot longer to complete. A roof used to just take a weekend. Sometimes now, oh, I can't get the plywood for another 3 weeks. Shingles are going to take another 5 to 6 weeks. So this building that could be damaged for 6, 7 weeks without having a roof replacement, right? And storms can come and still damage the interior of the building, right? So yeah, supply chain I think also has a lot. Also, the availability of contractors has really taken. They're just not as many as there used to be, and they're hard to find, especially a good one.
Yeah. Yeah, that's a big piece that I don't think folks think about too much. Availability of contractors, availability for work, how expensive that work is. What about the market, like the actual physical place where this property stands? Could you talk about the difference between a building that might be in rural Pennsylvania versus Manhattan and how insurance carriers approach the two?
Yeah, so the cost of construction, that big swing, right? We talk about that swing. To build something in outside of Philadelphia, Pennsylvania looks different than in Manhattan today. So always looking at those values, those stated values, understanding that construction looks different depending on what territory you're in. So a lot of insurance carriers use a lot of valuation tools to kind of put that into play. Again, they want to just make sure that they're giving the insured, proper insurance coverage, right? Because proper insurance coverage is kind of the main game, right? Of what we want to make sure we're putting them back to whole is what an insurance carrier is supposed to do.
What is improper insurance coverage? Is that just undervalued?
Yeah, undervalued, not insuring to value. So a lot of markets, because of the cost of building coverage these days or the cost of insurance, we've seen a lot of insureds go, "Well, just insure it for a $300,000 building. I know it's worth $1 million. Let's just insure it for 300 because that's all my mortgage is," right? Now, again, depending upon some carriers are okay with insuring that for just to bridge the gap for the mortgage, right? And they're okay with just insuring a partial loss. But a lot of times the carriers require you to insure it for co-insurance, right? Or an agreed value, a stated value, right? So underinsuring property, with carriers who write underinsured properties, if you underinsure it too long, you're not getting the appropriate rate for the exposure for the loss that's is going to occur, right? So that's kind of the end game or the game of insurance property 101, right?
Goodness.
So
Yeah, you better hope you don't have a total loss if that's the
yeah,
case.
or you have a lot of money in your bank to help you facilitate that building construction.
Do you run into that a lot? I imagine, maybe an account was placed with a carrier and it has renewed year and year and year again. Like you had mentioned earlier in the episode, values are not the same after a few years. So what does that look like if you reassess a book of business? Tell me about that.
Yeah, so reassessing the book of business, most carriers operate within like a co-insurance requirement, right? So it is up to the agent for them to go back to their insured and say, look, this is where we are. This is the cost of construction. Why haven't values increased? Let me run a new building valuation, right? Let me run the valuation to see what it should be at today to make sure you're adequately insured in the event of a loss. So I think, it is up to insurance carriers try to play a role in it by sometimes running some valuations and letting the insured or the agent know, but sometimes they don't. So again, it is up to that agent to kind of look at that renewal and go, all right, are they where they need to be?
That's a really great point. I think it's important for potential policyholders who may be listening to this to know that they can advocate for themselves to make sure they're properly insured, and for our agents that are listening to make sure that that is communicated. It's so important to make sure there's proper insurance. That leads me into my next point about a potential takeaway for our listeners here. One big piece of information that they could leave this episode with. Where would your mind go with that?
Oh, there's a lot of ways I could go with that one. I would say that, as 2026 evolves, making sure that, taking a look at the insurance policy is important. Using and looking at other markets availability, because again, there may be other markets available instead of just that one or two that you've been using for as long as you have, right? So again, whether it not just be price, but being aware of the coverages that are given. Maybe there's other markets now that are offering more coverage than they have in the past, because remember that change that we've said that we've seen in these past couple years, they're now getting we're offering a little bit more. So again, there could be more coverage and more availability to lines of coverage, more so than they have been in the past.
Interesting. One of my takeaways from this conversation is that is it safe to say there's a bright future here, or at least the immediate future looks pretty bright when it comes to property?
Yes, but as we stated before, some cat storms and things that happen, they could happen anytime, right? But I think the future is looking good for property insurance for sure, especially with the availability of markets coming in.
For our listeners, thank you for listening. Be sure to tune into the next episode of InTrend.